Now that Clean More Appliance is done making its worksheet and we know that our debits equal our credits, we're ready to start preparing our financial statements. Financial statements have to be prepared in a preset order, and the first one is always the income statement. We are going to do a multi-step income statement, where instead of just having a bottom line number, this is the income we had for a period, we're also going to show users of our information different breakdowns of our income, like what was our gross profit, what was our operating income, what was our EBIT, our income before income taxes, before we ultimately show them what our bottom line net income was. I have filled in a few of the spots on here, but not all of them, and I did so because I want to test your knowledge of what goes where. Like, how do you know how to find gross profit? What is the formula for gross profit? Well, the formula for gross profit is sales revenue less cost of goods sold. So if I go to our worksheet and I find the numbers for that, I should be able to find out what our gross profit is. I'm going to put this in the rightmost column. I'm starting with sales revenue. I go to the worksheet, and I see here that we had $6 million in sales revenue during the period. So I'm going to enter and bring that number on over. For cost of goods sold, I hit equals. I go back to our worksheet. I find how much we had for COGS for the period. That was $3 million. I click on that number. I hit enter, and it brings that number on over. And since gross profit is sales revenue minus cost of goods sold, I hit equals. I click on sales revenue minus cost of goods sold. Enter. Our gross profit is $3 million. We made $6 million in revenue. The cost of production was $3 million. So after we've accounted for the cost of production, we have $3 million left over to pay all of our other expenses. Just a quick point here. One thing that I've definitely seen for wonky sets of numbers I get is people adding COGS to sales revenue to find their gross profit. You can't have a profit margin higher than your sales. And I've seen a lot of students do it that I know absolutely knew how to find gross profit. So it's something easy to have an oversight on. If your numbers look a little crazy at the end, that might be a good spot to check to make sure that you did in fact subtract out COGS from sales revenue to get to your gross profit. But now that we know our gross profit, we want to figure out what our operating income is. And to do so, we have to list all of our operating expenses, things that are typical of our operations that aren't costs that can be contained in production. Like we can't inventory to whip inventory before it goes to finished goods, before it goes to COGS. Well, what expenses do we have listed on here? They're all these guys down here. COGS we already accounted for. What about the other stuff? Salaries expense here, I'm assuming, is the salaries for administrative assistants or administrators themselves that don't actually do production. And I'm assuming that because if it was the salary expense for people that are actually making our goods, it would have went into COGS. But it's still, those people have to be a normal course of operations. They should go into our operating income. Utilities expense, same deal. If it was utilities on the production facility, it would have ended up in COGS because it's a product cost. So let's assume this utilities expense that we have on here is for electricity at our showroom or at our administrative offices, etc. But it's still, that stuff is necessary for operations. Advertising is absolutely necessary for operations. Companies wish they could go and inventory their advertising costs. GAAP says you can't do that. That's an operating expense. Supplies expense. Again, we've got purchase orders, etc. that we have to print out, fill out, mail out. All of those are going to go into our cost of operations as well, but they can't be inventoried. Property tax expense, if it's on a property that's not being used for production, like our showroom or our administrative office, that's a cost you have to pay or you're not going to have the building for long, but you can't inventory it. Depreciation, again, we're going to assume that it's not production equipment depreciation or it would have ended up in COGS, so that's going to be an operating expense. Miscellaneous expense, blah, blah, blah. We'll assume all of these are actual operating expenses that couldn't be inventoried. The two expenses down here that can't be inventoried are interest expense and income tax expense. And I will be honest with you, I disagree with interest expense, but I don't get to make the rules. GAAP gets to make the rules. And their thought process is you don't need to take out loans for operations. Like a company could feasibly run entirely off just the money they make instead of borrowing money from other people. Taking out loans and therefore having to pay interest on those loans is not a necessary cost of operations. I guess so. Like for you guys, what you should know is that you're going to always put interest expense as an other. It's not considered an operating expense. And then you have income tax expense. Well, if we go back to our income statement, We see that we have income before income taxes. What do you think you're going to have to subtract from your income before income taxes to get to your net income, your income tax expense? So that has to come later as well. So what we need to bring in for our operating expense section are all of these guys right here. All of those guys want to make their way into our statement. They want to make our way into our income statement. You can Control C, Control V to copy and paste if you want to, or otherwise you can go hit equals in the first operating expense section. Go and find that operating expense, which our first one that we need is salaries expense. So I'm going to click on that and hit enter to bring it on over. And because we use the cell reference, I can just use the fill handle and it copies down all of the expenses that were underneath it. And we go back. Yeah, those are the guys that we wanted to have in. Those are the ones we consider to be our operating expenses. Now I got to fill in the numbers. I'm going to do this in the left-hand column so we can total them all up. So for salaries expense, I hit equals. I go back to our worksheet. We paid $280,000 for salaries, which we could not put into our inventory. Hit enter, bring that number on over. And just like I did before, I can fill handle on down. And I can go and double check and make sure it all makes sense. Utility expense is 170, advertising expense is 400, supplies expense is 100, property tax expense is 10, depreciation expense is 60, miscellaneous expense is 30. If I go back over here and I look at our worksheet, those in fact are the numbers that I wanted to bring over. So we're looking good here. One thing that is a little bit annoying about the method of fill handling things is if you want a line someplace, sometimes when you fill handle down, it'll delete the line because the cell that you're fill handling from didn't have a line in it. Like there should be a line underneath this 30,000 because it's the last of the expenses. If you want to throw it back in because it magically disappeared, this box up here right above font is your border box. And if you click the drop down, it gives you all the different options. We want a bottom border, which happens to be the very top one. So I'm going to click that and it came back in. And now I get to find our total operating expenses. And that's found by taking the sum of all of these different numbers. And that's going to be $1,050,000. So we had $3 million of gross profit. We're trying to figure out what portion of that gross profit is going to be left over after we paid for the cost of operations, which we couldn't put into inventory, which didn't end up in COGS. So all I got to do is subtract that out. Take the $3 million, subtract out $1,050,000, and we determine that Cleanmore Appliance had operating income of $1,950,000. Now I have to account for all of the others, as they call them. And these are things that aren't part of your normal course of operations, but they still affect your taxes. Like you still have to pay taxes on these items, even though they're not considered to be an operating expense. Or if it's an expense, they save you on your taxes. So what items could we have in here that didn't show up? It's things that Cleanmore Appliance did and made money from or paid costs for, which were outside their normal realm of operations. We're an appliance company. We got 3 accounts up here: gain on investment sale, dividend revenue, and interest revenue, related to us buying stock and bonds of other companies and making money off it. Well, that's great, and we're going to have to pay taxes on that, unfortunately, but none of those things are a normal course of operations. We are an appliance company. We're not brokers. We're not, an investment firm. So those 3 items have to go into our others. So equals, and then I come back over, and from the worksheet, I grab those 3 items, and I bring it on over. I don't want that. I don't know what that's all about. Hey, let's try that one more time. Equals, and I go from the worksheet. I'll grab the first number that I want, or the first account that I want, which was gain on investment sale. I hit enter. Now I'll fill handle. I don't want to spell. There we go. And then the other item that we have to put in here, as I stated before, is our interest expense. And our interest expense was a little under $100,000, $99,902. Let's bring that number on over. I didn't want to do that. Sorry about that. So let's go and grab the actual account name first before we bring the number over. We want interest expense. And now we can bring all of these values in. So for gain on investment sale, I'm going to put this in the rightmost column. What was that? Gain on investment sale was $132,500. Let's go and bring that number over. Dividend revenue for the period is going to be $42,000. $4,000. And interest revenue was $6,250. So we made a pretty good chunk of change outside of our normal course of operations. Probably, in fact it did, offset the fact that we had to pay for interest on all of the borrowing that we did. So if I go back to worksheet, now I can bring over interest expense of $99,902. And if I take our operating expense, or operating income, excuse me, and adjust it for all of these other accounts, I can find the sum of all of these items, add them together, and I get our income before income taxes. And then I look at it really fast and I say, that has to be wrong. Why does that number have to be wrong? Well, what do we have in our others? Gain on investment sale. Gain on investment sale means you made money off of selling your investment in another company. That should increase your income. Dividend revenue. Somebody else paid you, that company you own the stock of, they paid you. That should increase your income. Interest revenue. You own bonds in another company. They paid you. That should increase your income. And then we got interest expense over here. Interest expense means we paid somebody else. That should not be increasing our income. I don't want this number to be positive. I want it to be negative. So how can I fix that? If I click on the cell up here in the formula bar on the top, I just want to turn that number around and make it negative. So after the equal sign, I'm going to click in the little bar up on the top, and I'm just going to put in a minus. So now it says equals minus worksheet cell B49. And when I do, it makes it a negative number. And now I get our income before income taxes. And from that, I get to subtract our income tax expense. And our income tax expense for the period, if I go and I look back at our worksheet, was $230,848. I can bring that number on over. And our net income is going to be what our income was before taxes, less what we paid in taxes. That is $1.8 million. One thing that I get asked a lot on here is like, why isn't cost of goods sold negative? Why aren't all these negative? Why is only interest expense negative? It's weird. It's formatting rules. Essentially, you only display something in brackets on an income statement or on any financial statement if it's in a list of other things, but it's working the opposite way of the items in that list. And all of these are decreasing it. And a cost of goods sold is just a standard form here. So the only number on my formatting that you need to have is negative on here is your multi-step income statement.